There's an old saying that says, it's not timing the market, but time in the market is what matters. I don't know who originally said this, but it has proven to be true over the years. Now, market timing the market, this is an ever-present temptation, and the allure is strong because done right, you can make a lot of money in a short amount of time. The problem is, it just doesn't work for most people most of the time. So I'm Jonathan Harner with Wichita Wealth Management, and I want to share 3 reasons why market timing doesn't work and what to do instead. So the first reason is market timing is consistently inconsistent. Now, market timing, just to explain what that is, or what I mean when I say that, that's where you buy low and you sell high. And in order to do that, you have to be right twice. You have to be right at the bottom and right at the top. And not only do you have to be right twice, you have to be right with a great deal of precision. It's not enough to just be right about the trend of the market, whether it's going to go up or down in a given year. You have to be right down to the day. Now, unfortunately, being right about the exact day the market hit bottom or peaked is almost impossible to do except in hindsight. Many people have been right about the direction, but not about the exact day that it bottomed out or hit the top. The second reason is survivorship bias. This just means that only those who survived are still around. So in our context, what this would look like is you go out to Yahoo Finance or Google Finance, or you're talking to your neighbor in the backyard, wherever, and you see all of these stories and all of these headlines, and you hear about all of these people who correctly predicted the financial downturn in 2008. XYZ investor predicted the price of gold in 2020. What those articles don't tell you is the 10,000, 10 million, everyone else basically who didn't accurately predict the direction. Not only that, those articles don't tell you if they were right both times. They only tell you that so-and-so accurately predicted that the 2008 financial crisis was going to happen. It doesn't say that they predicted the day that the markets bottomed and the day that the markets peaked. The third reason, and this is my pet favorite, you'll miss out on compound growth and market rebounds. Research done by Vanguard has shown that if you miss just the 10 best days in the last 15 to 20 years, you would have missed out on about 50% of the growth in the stock markets. That's shocking. So that means, let's say here again, you did predict the price of when the market was going to bottom out or hit the top. Well, what if the day that you needed to get back in or get back out because you were trying to time things, what if you were sick, you were on vacation, your child was sick, and so even though you knew this is the day, you weren't able to make the trades to get in or out. In that case, it's pretty hard to make up that 50% loss. So if market timing doesn't work, what do we do instead? Well, the first obvious answer is stay invested in the markets. Remember, the markets fluctuate. They're emotional. They're fickle. You are not. You're disciplined. You are consistent to stay invested through these ups and downs. The second thing to do, let's say you got out. You went to cash, and you're trying to figure out what to do now, how to get back in. This is a great time to dollar cost average, which is essentially you pick a day of the month or a day of the week, and each week or each month you invest a little bit of your cash until all of it is back in the market and back working for you. The other thing, this may be obvious as well, but if this is all overwhelming or intimidating, or you're just tired of dealing with it, I would really encourage you, work with a professional. Find an advisor, a financial planner, a CFP, someone you trust to help you make these decisions about investing in the markets. Just because We want to stay invested. Doesn't mean we're always going to stay invested in the same things. It could be time for an allocation update or to rebalance your portfolio. So again, if you're looking for a trusted professional, I would love to chat with you. You can go out to our website and get our contact information, wichitawealth.com. So thanks for watching, and hope to talk to you soon.